Thank you for standing by and welcome to the Orocobre Limited 2018 half-year results. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. I would now like to hand the conference over to Mr. Richard Seville, CEO and Managing Director. Please go ahead.
Thank you. I'm on page 4, which is the first main slide in the presentation. We had a strong half, a very strong half. We had record sales, we had record prices and margins, and strong cash flow. During the half, we had a record $63.1 million of sales of 5,532 tonnes of lithium carbonate. We had record sales prices of $11,415 a tonne FOB, rising prices there, and expecting them to continue to rise into this half with an increase of 25%. Cost of sales at $4,336 a tonne led to a record gross cash margin of over $7,000 per tonne. We had an EBITDAIX of $37.2 million, up 5% on the previous corresponding period. And once again, Olaroz was strongly cash flow positive. We've now had 7 consecutive quarters of positive cash flow. The group net profit, therefore, was $8.2 million. There was a Borax impairment of $1.9 million, offset by a profit on the sale of exploration assets of $2.2 million. And at the end of the half, 31st of December, we had cash on hand of $50.5 million in our corporate account. After the recent equity raising we've done, that is approximately $335 million on a pro forma basis. With that, I will pass over to Neil Kaplan, the company's CFO.
Thank you, Richard, and a good morning to all. Moving to slide 6. First up is the Olaroz joint venture structure. The transaction that has occurred with Toyota Tsusho last month will result in Toyota Tsusho owning 15% of Orocobre. Orocobre has a 72.68% ownership in Sales de Jujuy Pte., which in turn has a 91.5% interest in Sales de Jujuy SA, giving Orocobre an effective 66.5% interest in Sales de Jujuy SA. The statutory accounts show such investment as being equity accounted due to joint control being exercised with Toyota Tsusho. We have therefore presented the joint venture on a 100% basis and then eliminate the non-controlling interest to show what Orocobre's accounts would look like on a proportionally consolidated basis. Moving on to slide 7, this slide details the P&L on a proportionally consolidated basis. Moving from left to right, the first column is the statutory P&L as shown in the accounts. The second column shows the JV on a 100% basis, whilst the third column eliminates the non-controlling interest. Column 4 adds back the equity accounted amount, resulting in column 5, which is what Orocobre's P&L looks like on a proportionally consolidated basis. Looking at column 2 on a 100% basis, a strong profitable half for the JV despite a weak first quarter with $63.1 million of revenues and a 59% EBITDAIX, resulting in a net profit after tax of US $20.7 million. Orocobre's share of the JV net profit after tax is $13.1 million. On a proportionally consolidated basis, this resulted in a net profit after tax of $8.2 million. Moving on to slide 8. This waterfall chart breaks down the proportionally consolidated P&L from Orocobre's perspective. EBITDAIX was a healthy US $21.8 million. During the period, Orocobre had one-off profit of approximately $2 million from the Diablillos transaction. At 31 December, certain indicators in terms of the accounting standards were present in assessing the carrying value of Borax. This assessment of such carrying value resulted in a one-off bad debt provision being booked of approximately US $1.9 million. Orocobre has approximately 33% shareholding in Advantage Lithium and booked a US $1.1 million charge, being its share of Advantage Lithium's loss. The income tax expense booked is Orocobre's share of the income tax charged from Olaroz. This then brings it back to the statutory profit of $8.2 million. Moving on to slide 9, this slide shows the proportionally consolidated balance sheet of Orocobre, which is detailed in the same format as the P&L. The balance sheet is much stronger. Under current assets, cash has increased on a consolidated basis to $61.2 million, principally due to the release of SPLCs and the fact that SDJSA had $16.1 million of cash on its balance sheet. Following the year-end, the TTC deal and entitlement offer was announced, which would leave the company with a pro forma cash balance of approximately $335 million. Financial assets of $2.4 million are the SPLCs related to Orocobre, following US $7.4 million being released back to the company during the half, as well as a $1.2 million of shares that Orocobre holds in LithiumX. The increase in inventory will be detailed shortly. Under non-current assets, the investment in the associate of $20.4 million is Orocobre's investment in Advantage Lithium, resulting from the sale of South American salars. The VAT receivable has reduced substantially given the VAT recoupment process is working efficiently. As of today, the November VAT return has been approved and funds are expected in the next 2 weeks, and the December presentation has been submitted for approval. Current and non-current liabilities. Loans and borrowings have had a net decrease mainly due to the principal repayment of the project finance debt in September of $10.7 million. This was offset by a net increase in low-cost, unguaranteed export finance facilities following repayment of SPLC's-backed working capital facilities, given Sales de Jujuy had $16.1 million of cash on its balance sheet at 31 December. The deferred tax liability has increased as Olaroz has generated taxable income and starts using up carried forward tax losses. Moving to slide 10, the proportionally consolidated cash flow shows strong cash flows from Olaroz. On a proportionally consolidated basis, just over $13 million was generated from operating activities, resulting in $61.2 million of cash on hand for the group. At corporate level, $7.4 million of SPLCs were released back to the company. The movements related to Olaroz are detailed in the following slide. Moving to slide 11, Olaroz is repaying debt and releasing cash as a result of a strong EBITDAIX of $37.2 million, coupled with VAT collections of approximately $8.8 million. The unsecured export finance facility was increased by $15 million, allowing standby letters of credit-backed working capital facilities of $10.2 million to be released, as well as allowing Sales de Jujuy to build a significant cash balance of over $16 million. Our bankers, HSBC, have recognized the continued strong financial performance of the business in making such unsecured facilities available. Finance costs are related to the Mizuho interest rate swap, and working capital facilities. SDJ repaid Mizuho Bank principal of $10.7 million related to the project debt. CapEx of $8.5 million was paid during the period. VAT payments during the year on materials and services of $6.9 million were made. A working capital movement of $8.8 million occurred. The main reasons for this are an increase in inventory of US $10.9 million, of which $7 million relates to brine inventory, split between an increase in LCE and costs related to secondary liming to manage the impacts of a pond that was brought back into circuit with high magnesium, as previously advised. This program is nearing its end, as this high magnesium brine has worked its way through the system. The balance of the inventory increase relates to approximately $3 million increase in reagents and spare parts, as well as an increase of approximately $1 million in finished lithium carbonate inventory. The other working capital movements are a decrease in accounts receivable of $2.8 million and a $700,000 accounts payable decrease. Moving to slide 12, strong cash flows have helped to reduce the Olaroz project debt facility down from $192 million to approximately $133 million, which translates to $59 million of principal paid over the first 2.5 years. The March payment, which is due in 2 weeks' time, is taken into account in the numbers I've just mentioned. This facility has a low interest of approximately 4.25% and is repaid biannually through September 2024. As detailed in the quarterly, Orocobre has net debt of $62.5 million as at 31 December 2017. And on a pro forma basis, post the TTC transaction and entitlement offer, net cash of approximately $272 million. So in summary, even in ramp-up, we have established ourselves as one of the world's highest margin producers. We have strong cash flows and are paying down debt, and we have a strong balance sheet which has been further bolstered by the TTC transaction and entitlement offer, allowing Orocobre to be fully financed for its growth plans. Thank you, and I will pass you back to Richard.
Thank you, Neil. I'm going to spend a little bit of time talking about the transaction which we just completed with TTC and the entitlements issue, and then looking forward to our growth projects. I'll spend a bit more time than may be necessary because many of you won't have had an opportunity to hear me speak about this transaction, given the restrictions during the raising. Only people who were in Australia or New Zealand had access to live information. So if we turn the page to slide 14, we can look at the overview of the transaction. We've just completed a transaction that brings into the company $285 million US. That's in both a placement to TTC in two parts and also the entitlements issue. The placement price to TTC was done at $7.50 a share, which was at then a 17% premium to the Orocobre 30-day VWAP of $6.43 a share. They also bring with them a $100 million debt package. They have an obligation to procure that package out of Japan on similar terms to the phase 1 debt that we had in place in 2012. So low interest debt with JOCMEC as guarantor is the expected outcome of that process. And we're expecting the documentation to be completed in this coming quarter. The purpose of this money is to go hard with our expansions. So the size of the expansion of Olaroz has been increased from 17,500 tonnes per annum to 25,000 tonnes per annum, off the back of the indications of demand that we've received directly and through Toyota Tsusho Corporation, and clearly they're speaking for their parent. So we're looking at a total capacity of 42,500 tonnes per annum at the completion of phase 2. We've already started work on the long lead time items, so bore field development as an example, and we expect construction in earnest to commence in the second half following a final investment decision mid-year. And we're targeting commissioning of phase 2 in the second half of 2019. We're very well prepared for this. We've been working hard on the expansion plans. Basic engineering has been completed, and we've moved on to detailed engineering to fast-track this project. The lithium hydroxide plant in Japan, that is advanced. We've had indicative approval of $27 million worth of Japanese subsidies for construction, and we have indications of the various debt packages that will result in Orocobre only putting in $6 million worth of equity. The partners are in the process of contractor selection, with construction FID first and construction to commence mid-2018. CapEx has gone up to between 60 and 70 million. We're not providing definitive figures yet, as we're dealing still with two competing bids, whilst operating costs have gone down significantly from $2,500 per tonne to $1,500 per tonne. The project will be very attractive. If we turn the page to page 16, I'll spend a little bit of time fleshing out some of those details. In terms of the upsizing of the expansion production at Olaroz, as I said before, we're increasing the production, the expansion from 17,500 tonnes per annum to 25,000 tonnes per annum, to give us a total design production rate of 42,500 tonnes per annum of lithium carbonate. The expansion will maintain that simplified profile of just a primary product. So at that point in time, we'll have 17,500 tonne per annum battery grade and 25,000 tonnes of primary production, of which approximately 9,500 will feed the lithium hydroxide plant in Japan, and the rest will go into other markets. Commissioning at the back end of the second half of 2019. The operating costs will be lower than our current production as there's no purification circuit. Capital costs are $271 million, excluding VAT of $42 million, and that includes a contingency of $25 million. The allocation of that capital is shown in the table on the right-hand side. We're looking at a final investment decision mid-year, and construction commencing in earnest in the second half. We have all approvals for this project now, and that's another step since we actually made the announcement, or did the TTC announcement last month. In terms of the hydroxide plant, the details on page 17 of the presentation. This has been progressing strongly. We're in final negotiation phase with the two contractors, and we're looking at a final investment decision on this mid-year, and construction kicking off soon after. Commissioning in the second half of 2019 at a similar time to that of the commissioning of the Olaroz expansion. The project's been well supported by the Japanese government, and we have indicative approval of a $27 million construction subsidy and strong support from Japanese banks and financial institutions. So when you take the whole package into account, the equity contribution from Orocobre will be $6 million. In terms of economic return, the split on the project will be in the order of 75 to Orocobre and 25% to TTC. Turning the page to slide 18, Advantage Lithium. We own 33% of Advantage Lithium, and we have a direct interest in the lead project there of Caucharí. After spending $5 million, Advantage has gone to 75% of Caucharí, and now we will start to contribute. The project's advanced very well with good drilling results, not only from a concentration point of view, a brine concentration point of view, but with good flow rates on both sides of the basin, on the northwest side and also on the southeast side. Where on the southeast side, drilling intersected the sand sequence at the bottom of the profile, which was a good exploration success. The project's advancing for a resource estimate shortly, which will lead into a scoping study to set out the development options for the project. One of which could be a supply of raw or concentrated brine to the Olaroz plant, and the alternative would be a standalone operation. Orocobre has first right of refusal of any brine supply. The money we've raised is from the recent capital raising. Some of that will be allocated to the Caucharí project. Turning the page to slide 20, spend just a little bit of time on Borax Argentina. Management's been working very hard at Borax Argentina, and it's pleasing to say that from a production point of view, operations both in the boric acid plant at Campo Quijano and at Tincalayu are performing the best they've ever done, with a driving down of unit costs. The high levels of production have led to stock build-up, and as you know, sales will always lag production. So the sales effort's been hard in the last half, and we should be seeing some results from that sales effort as we roll through this half. In terms of the actual numbers of performance, the sales for the half were $7.9 million, down $0.6 million, principally because of the dropping off of a high volume but slightly loss-making product into the agricultural sector in Brazil. The net loss of $1.5 million comparing to $1.3 million in 2016. In terms of the feasibility study, that is very close to completion right now. We have an independent consultant reviewing the study to ensure it will pass due diligence processes, and the study is looking attractive. The results of that study will be released relatively soon. Turning the page to page 22, and we're looking at markets here. Our view, very simply, our view hasn't changed. We have updated our curves in terms of the recent news and taken a view on the time to production of the various projects and updated the demand side view. And our view continues to be that supply will struggle to meet demand. As you can see in the graph, the supply that we see coming will support the consensus view of the most pessimistic of the demand scenarios. So just in summary, on page 23, we had a strong half with records in all of the measurables, pricing, revenue, margin. We had a half-year profit of $8.2 million. We've confirmed our position as a low-cost, high-margin producer with an Olaroz EBITDAIX of $37.2 million for the half. We maintain our guidance for FY18 of approximately 14,000 tonnes of lithium carbonate. Our growth projects now are fully funded. We have an increased expansion for Olaroz, no longer 17,500 tonne per annum, now it's 25,000 tonne per annum, to deliver a 42,500 tonne per annum operation at Olaroz, with commissioning in the second half of 2019. We have a plan, and we're delivering on it, for a 10,000 tonne per annum lithium hydroxide plant to be built in Japan. The final investment decision for both operations is mid-year, and commissioning at the end of 2019. Lithium fundamentals remain strong, with prices last half higher than the previous half, and we're expecting an increase this half of 25%. And Olaroz is set up for further stage expansions from our very strong balance sheet. So thank you very much, and I'll hand over to the operator for any Q&A.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you are on a speakerphone, please pick up the handset to ask your question. If you wish to ask a question via the webcast, you can do so by pressing Ask a Question on the top right of your screen. Your first question comes from Andrew Hodge from Macquarie Group. Please go ahead.
Thanks, guys. Just had a few questions. The first one, I guess, is just about borax. I guess just losses kind of continuing in this business, and just given how much money and focus and time is going to be going into the expansions, should we be starting, is there any possibility that you guys might consider sort of, I guess, selling off this business or spinning it off in some way to be able to try and refocus? second question was just about the accounting for Advantage Lithium's costs. Just obviously unexpected, and just wanted to get a view on how we should be thinking about that going forward. And then the third thing is you've talked about the prices being pretty strong in the first half. Clearly, I think we can see that that's kind of coming through. Just wanted to see if we can get any kind of idea about what your expectations are around sort of into the second half as well, if you think it should be continuing to.
Neil, I'll let you answer those questions.
So Borax, Andrew, we're having a good look at Borax. We've reduced costs substantially there. It's a matter now of a sales drive to get the inventory build-up, which you'll see on the balance sheet, sold. So you would have seen on the balance sheet there's about a $3.5 million build-up, and we've put in about $4.6 million. So the $3.5 million build-up with a loss for the period makes up the money we've put in, but we're expecting an increase in sales and for it to start heading in the right direction, as well as the feasibility study for the expansion of Borax, which would turn the business into a very different asset. So we're assessing all options, and we will make the appropriate announcements at the appropriate times to advise where we're headed with Borax.
Okay.
So that's on Borax. Advantage Lithium, just a quick one, Andrew, on your note that you put out, you mentioned our investment in Lithium Americas, which should be Advantage Lithium. So
yeah, I realized that afterwards, yeah.
Yeah. Couple things on Advantage Lithium. I remember you asked a question last time where you said the share price of Advantage Lithium was 46 cents, and why are we carrying it at what we were carrying it at? Well, it's the reverse situation now. We're carrying it at 20.4 million. Its share price is $1.20. With the shares we have, we're sitting with about $28 million. That's the market value. $28 million. We're carrying it at $20 million. So total reversal on that. The share of the loss in Advantage Lithium is the costs that they incur, and based on our shareholding, we will share in those costs going forward. So if you want to model that, that'll be approximately $2 million US a year. You should model for that. We're a major shareholder and we share in those costs. That's the agreement. So that's what it's going to be going forward. I also understand just whether you saw the write-off of the Borax 1.9 million, which is a one-off provision. Sorry to go back to Borax, but just a point I didn't add earlier. Yep. The 1.9 million, which was a bad debt provision, which we booked. You've also got to look at it in the sense that there was a Diablijo's profit of approximately $2 million, which is also once-off, which are Borax and South American solar assets. So they substantially set off each other. In fact, there's a $100,000 profit when you look at that. Your third question, Andrew, if you can, if I haven't answered anything on the first two, please ask again.
Yep. Third question is about lithium prices, sort of into the second half. Are you still seeing the same strength as what we're already seeing in the first half? Are you expecting to see the same?
Andrew, I've got David Hall with me, who's this is his main focus, so I'm going to let David answer.
Okay. Hi, Andrew.
Hey.
A bit early to make a call on the second half, given that we're not actively in negotiations for the second half at the time. But in general terms, our view is that we'll see incremental improvement in pricing heading into the second half of the year.
Okay. And if I can sneak in a cheeky last question, I was just trying to work out the balance between, you've got it in the appendix, but just to get your thoughts on what the net likely outcome is going to be about the changing royalty rate in Argentina versus changing corporate tax.
Richard, can you pick that one up on the royalty?
Well, the royalty, if the change in royalty actually happens, it goes to a 3% revenue royalty plus a 1.5% infrastructure tax. At the moment, it's stalled. The process is stalled. It's had agreement from most of the governors who it relates to, but there's uncertainty about whether that change will actually go through Congress this term. I might say term, I mean Macri's term. There's also uncertainty about whether the existing projects with fiscal stability agreements are actually grandfathered or not. So it's a rather uncertain position. But if it did happen, then it goes from 3% mine mouth value to 3% gross royalty plus a 1.5% infrastructure tax.
When do you think that we'll get any kind of clarity, Richard? I mean, obviously, both it's still substantially better than what has happened to Albemarle and SQM in Chile, but just wanted to kind of get when you think you'll likely get some kind of confirmation.
Well, the view at the moment is that it's more than likely to there's more than a 50-50 chance he'll split into the next term, so that could be 3 years out.
Okay. And then obviously, if that's the case, then would be pretty net positive then from the corporate tax changes.
Correct, Andrew.
Yeah.
Although I haven't modelled it.
Yeah, that's okay. I think it's a Neil question. So, yeah. Okay, thanks, guys.
Thank you. Your next question comes from Reg Spencer from Canaccord Genuity. Please go ahead.
Thanks. Good morning, guys. Neil, question for you just on the depreciation at the SDJ level. Can you remind me how we should be modelling depreciation at that level?
Yeah, generally we look at depreciation at SDJ's $10 to $12 million a year.
And how is that calculated? Is that a unit of production basis and
yes,
that on?
Correct.
Okay.
Yeah, on units of production, but it's what's been sold, obviously, what we're booking.
Gotcha.
Because so what's lithium carbonate sold?
Michael asked, sort of covered off on my questions on the tax changes. Is it fair to say the negative impact of the withholding taxes on foreign distributions will not be felt for some time, given that a lot of the cash generated at the SDJ level will be used to fund the Stage 2 expansion. So I guess my real question is what kind of time frame are we thinking about when SDJ might or will be in a position to start paying dividends to the joint venture partners?
Well, as you know, we're headed into Expansion 2. We've spoken about Expansion 3, and that we see that as the best use of shareholders' funds, given the lithium market. So, I mean, it's out in the future. So the withholding tax, that's delayed into the future, Reg. I mean, I can't give you an exact year or time frame, but we've got Expansion 2. There'll probably be an Expansion 3. So dividends for the next few years are not contemplated. Hence, that withholding tax is not going to come into play. As you know, there's the reduction in corporate tax rate, which in 2017 was 35%. 2018 and 2019 it reduces to 30%, and in 2020 it reduces a further 5% to 25%.
Understood. And lastly, just at Borax, can you tell me what the carrying value of that business is at the minute?
It's approximately 10 million.
Okay. It's fine. All right, all good from me. Thanks, guys. Appreciate it.
Thank you. Your next question comes from Rahul Anandan from Morgan Stanley. Please go ahead.
Hi. Thanks, guys, for the presentation. First one's, I guess, for Richard. Just wanted to understand the magnesium issue that was talked about, re the ponds. Firstly, if I could understand the mag to lithium ratio that the pond got to and where the problem originated, whether it was more to do with residual salts in the pond or that came from the ore body itself.
No, it's a legacy issue, really, Raoul. Back in the early days, and I'm talking about 2013, 2014 period, we had the first pond we filled was pond 4B, and the then route of brine treatment had pond 4B and then to the liming plant, and then into pond 1A. And the problem we learnt early on was that you got a lot of incrustation in these long pipes, and the pipes would just seal up with salt. So we then changed the positioning of pond of when the lime was added. So it gets added straight away as the brine comes from the bore field. So we had this cooking pond, pond 4B, which was full, and it would get topped up if the liming plant was out. That was brought back into circuit bit by bit, but particularly from mid last year. And therefore it had just basically the raw brine magnesium to lithium ratio, but the lithium content in that was higher and the magnesium content was higher. And because it couldn't go through the primary plant, it had to go through a secondary liming process. So
gotcha.
That's all. That pond was completely drained, but the brine then is going through the system. So it's nothing fundamental. It's more of a legacy issue.
Okay, understood. So basically, just addition of lime to get the mag precipitated. The second question was just related to the TTC deal. Now, sales agency rights going for the entirety of phase 2 to TTC. Just wanted to understand if you can provide any visibility around what the potential rates or marketing rates might be on the revenue streams for phase 2.
I'm not going to provide complete transparency, but I'm going to provide you with some qualitative transparency, considerably less than your commentary. I think you put out a note about the time. So in broad numbers, you divide by 2 to what is a below market rate, but that's not a precise figure. And the deal is takes us out in effect for 10 years on stage 2. So there'll be a renegotiation at that point in time.
Understood. So just circling back to what I might have written then, I mean, I was trying to marry it up sort of in line with phase 1 at 5%. So you would suggest that, you know, I'm not in the ballpark there?
No.
Okay. Excellent.
No,
thanks.
And you're right to kind of use 5% in the first instance, because that's the typical deal. If you look at, the Mitsubishi concentrate arrangements with our friends, that's their level. But no, we've negotiated a much lower number, both currently what we're paying and in the future. And what was probably just as important as them getting sales agency was us getting involved and having equal rights when it comes to the marketing and the commercial aspects. Very, very important for us to be at the table directing where our product goes.
Okay, understood. Thanks for that.
Thank you. Your next question comes from Chris Cahill from Quest Asset Partners Limited. Please go ahead.
Thank you. A couple of questions. Can you just comment on the TTC marketing fee? Are there any changes there? And in relation to slide 4 with the sales price guidance 14 odd in the second half, have you shed all legacy lower priced existing contracts in that number, or are there still some left?
Well, Chris, I think I've pretty covered the marketing fees or the sales agency fees for Raoul there. They're considerably less than what one would consider in the market. And I'm just thinking I can do some numbers in my head as we talk. Yes, and the stage 2 would be would be less than we're currently paying, a little bit less, and significantly less than we'd be paying in a couple of years' time, because the stage one arrangements, obviously, to develop markets have a slightly higher rate at the beginning than as they drag out. In terms of the pricing, there's no sort of legacy contracts as we had talked about a year or two ago, but of course contracts have different times to finish. So if you were pricing a contract in June, July last year and it was 12 months, then of course that contract's rolling into this half. So what you'll see is you'll see a lag effect compared to what might be happening in terms of market sentiment at the time of the negotiation of the contract. So this 6 months doesn't have legacy contracts in that term, but it does have some rollover or some continuation of tonnage from contracts that were negotiated sometime in the past. But it has a dominant part of fresh contracts, and as we move into the next half, that will almost entirely be fresh contracts, if you see what I mean, but it will have, of course, a potential lag effect of 12-month contracts versus 6-month contracts.
Okay, thank you. And just on current pricing, while you've given a guide to second half, given those comments, if you would price a contract now, can you give us some idea of what you're looking at on a spot basis from your point of view?
David, can you answer that question?
Yeah, sure. Chris, depends on a number of factors. Obviously, product specification, size of the customer, size of the order, strategic value. There's a whole basket of factors that add into the mix. In terms of price range, right now, you're in the range of approximately $14,000 a tonne up to about $18,500 a tonne on a CIF basis as a guide.
Okay, thanks very much.
Thank you. There are no further questions from the phones at this time. I will now hand over to Mr. Seville for webcast questions.
Thanks, Amber. We do have a couple of questions, one relating to Borax Argentina, which I think we've answered previously, but there is a question here as to when will SDJSA start paying Argentine tax and what's the current tax rate? Maybe Neil could answer that?
Yeah, I'll answer that question. If you take the expansion out of it, with our stage one that we're currently in, we would start paying tax in approximately 2020. However, given the expansion is going to come into play, there's going to be accelerated depreciation, etc., in terms of the tax law. So paying taxes are going to probably push out closer to 2023, 2024. And the tax rates, as I mentioned earlier, are dropping. So we're going from the 35%, which was 35% 2017, down to 25% in 2020.
Just to add to that, the accelerated depreciation arrangements on under mining investment law are, in a general sense, 60% in the first year, 20% in the second, and 20% in the third. And then your tax losses roll for what is it, 5 years, Neil, after that. So it's a very attractive investment regime from a deferral of tax point of view.
Yeah, mining you can carry forward. Yeah.
Thanks, Amber. That's all the questions at this end. Is there anything else on the teleconference Q&A?
There are no further phone questions at this time.
Well, thank you all for attending our half-yearly call. It's been a pleasure to talk about the transformative transaction that we've just done, and we look forward to delivering more lithium carbonate and becoming a serious player in the market in the coming years. So thank you very much.